We're at new highs right here and over in Asia and Europe, too. The markets have been up. Trump mentioned taxes, tax reform issues would be brought up in the next couple of weeks. Last week, we had our best volume day on Thursday during a snowstorm. So there's the magic words here. And over in Asia, global markets were up. The Asian stocks didn't care about North Korea's missile launch. Japan's Nikkei is up. Hang Seng's up. Shanghai is up. Smaller markets like Vietnam and Malaysia were also on the upside. In fact, the European emerging markets have been doing very well recently. Europe's up as well. We've got some of the material names doing well. ArcelorMittal's on the upside. A lot of the steel names are up. Rio Tinto's on the upside. Glencore's having an amazing year. It must be up close to 20%. It was also strong over in Europe. Here in the United States, what you want leading the market? Your banks, your materials, and your industrial names. Not a lot of new highs out there. As Carl mentioned, Apple is essentially sitting right near a new high, but not a lot of new highs, but it's the ones that you want leading the market there. There you go, your three there. Banks, industrials, and materials leading the market. Jim was talking about global growth, and that's a very good point because that's what we're starting to see right now here. So look at the major regions. While the U.S. is up 3.5%, the rest of the world's outperforming. Emerging markets are having a great time. There was a number of reports out, analyst reports over the weekend about this. Goldman was talking about higher inflation underpinning the reflation trade. There was a lot of talk about growth momentum in emerging markets as well. But even Japan, with the weaker yen, has been outperforming. And even Europe, that's the EFA. You can buy that in an exchange-traded fund. Europe, EFA is the symbol, is outperforming the United States. So there's a general feeling that global growth is improving in general. Meanwhile, let's talk about stocks here in the U.S. You see Macy's on the upside. Barron's did mention it. Although I would note at $32, Macy's was $70 in July of last year. But there were some very interesting points. Aside from the obvious sale, which they felt would meant net a 50% upside for Macy's, downsizing the physical stores could just by itself result in a 20 to 30% gain. And they are the sixth largest online retailer. It was a very good point that Barron's made. Online sales are growing 15% a year. So independently of whether they're sold or not, they're still making inroads generally above the rest of the retailers, certainly above the rest of the department stores right now. Finally, there was an article, I think a very interesting one in the Journal about Vanguard hitting $4 trillion in assets under management. That's certainly quite a feat. They are not number one. BlackRock has been number one for a while. They have north of $5 trillion. That was at the end of January. Vanguard is from the beginning of February. But you see the differences here, how BlackRock and Vanguard and State Street and Fidelity are pulling away from the rest of the pack. JP Morgan would be 5 here. But the point is Vanguard's been doing so well. It's doubled its assets in 5 years. It was about $2 trillion 5 years ago because of the growth of indexing. Vanguard does have active management as well as indexing, but most of the money going into these funds these days are in the indexing side. And you can see of the top 10 ETFs that are out there, Vanguard has 4 of the top 10, and here they are. These are all index-based total stock market, which is essentially small, mid, and large cap thrown together. The S&P 500, these are $90 billion. Emerging markets and developed markets. So they essentially cover the globe here with 4 ETFs that capture a huge part of the market. Number one, by the way, still the S&P 500, iShares S&P 500, which is SPY, that has nearly $200 billion in assets. But the bottom line is indexing continued to win. Vanguard continued to be the perception that they are very involved in indexing and very involved in long-term investing as well, why they attracted so much money way back in January. Right now, the Dow up 105 points. Carl, back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.